Alright, advanced Happy New Year to whoever's watching. Right now we're in 31st December. One more day left before we move on to 2023, the next quarter. So what I want to do is I want to mark out what happened during the previous quarter, which is from October to the end of December. And I also want to mark out the 20 days, 40 days, and 60 days away from the first quarter of 2023 and see what has price done during those periods. So right here we do have relative equal highs over here, which it's totally possible that they would want to seek for if price was to find sponsorship above this daily balance price range, the purple zone. Okay, right, but I'm more favoring this fair value gap right here to act as an opportunity to enter short. Okay, so when I see wicks like this, I would much rather tend to use the bodies of the candle. So from the previous swing high, let's say if I use it from here to this lowest body of the candle for this range here, above 50%, we do have the breaker and we do have a order block. Okay, above 50%, which is premium. So from here I'm looking to take a short in January, heading into minimum. See this equal low, I'm targeting this, and even if you use the highest body of the candle for this entire range move down, it's still above 50%, still in premium. So I think I want to use this order block as my entry. Right, it's within this fair value gap with the breaker, very high confluence over here, and heading into January, seasonal tendencies are usually that January is bearish, so that even more highlights the strong probability of price going down when it reaches this area. Okay, that is what I'm thinking and what I'll be looking to do. Right, so my target would be this relative equal lows, but I'm not too sure it's gonna sweep this liquidity. I don't have to know, I don't have to be for sure, but I think this is the main target for now. Yeah, because we do also have SMT divergence. If you look back for the Dow Jones and Nasdaq, Dow Jones made a higher high, Nasdaq made a lower low. Okay, that is good enough for a confirmation, right? Nasdaq could probably be a better shorting market because it has relative equal lows down here, and it could overextend, right? For Dow Jones, likewise, it has inefficiencies here to fill. It's gonna fill it, and then from there we'll look to see what happens, right? Nasdaq, I'm thinking somewhere in this breaker here, we'll get to see set up. This breaker, balanced price range, and this order block, right? If you use the fibs, swing high, swing low, that's above 50%. The order block, balanced price range, the breaker, okay, it's all in premium. Similarly, if you use Dow Jones, swing high, swing low, over here is still the fair value gap, right? Here's the breaker and here's the order block. So yeah, I'm looking price to react strongly from this area here and we move down, right? And this is like what they call the retail fixed support. So I'm looking to cover my shorts below these areas. Yeah, I think that's about it. That's the plan for 2023 January moving forward, right? I gave you my plan, and let's see how it pans out. And yeah, I think, is there anything else that I can highlight? I mean, if you look at this probability of January moving down, then this relative equal highs could be saved for maybe around March, April, where we usually find the high of the quarter, the high of the season, and from there breaks down and crashes into May. So that could happen. That's why I'm only targeting this swing low over here. So best case scenario, my entry would be this open of the order block right down to this level here. That's 5%, right? 5%, good enough. 200 points, that's what I'm looking for. Right, one contract, $5 per point. There you go, $1,000. And yeah, nothing else to say to add on anymore. So that's it.